Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Thursday, April 10th, 2025. This is Nelson John. Let's get started. Just a heads up for all you market watchers, the Indian stock markets are taking a breather today. Both the BSE and NSE are closed today in observance of Mahavir Jayanti. Markets will reopen tomorrow, Friday, April 11th, with regular trading hours. In a dramatic twist, US President Donald Trump hit the brakes on his global tariff blitz, dialing down duties for dozens of countries, even as he cranked up the heat on China with even steeper penalties. On Wednesday, Trump announced a 90-day pause on tariffs and a lowered reciprocal tariff of 10% for most non-China trade partners, aiming to cool tensions in a red-hot global trade war. Quote-unquote, "No other president would have done what I did. Somebody had to do it," Donald Trump thumped to reporters, defending a dramatic tariff offensive that's shaken global markets. But at the same time, he hiked tariffs on China to a staggering 125%, accusing Beijing of showing a lack of respect to world markets. Trump claimed that over 75 countries had reached out, prompting him to offer his temporary truce, though specifics on easing with allies like the EU, Japan, and South Korea remain fuzzy. A senior White House official clarified that Mexico and Canada are not part of President Trump's 90-day tariff pause. But the fireworks weren't over. China hit back, slapping 84% tariffs on US imports, escalating the trade war. The EU and Canada followed suit with retaliatory taxes after Trump's earlier levies on steel, aluminum, and autos. While Washington insists the tariff rates are negotiable, insiders admit talks could drag on for months. So is this a cooling off period or just the eye of the storm? Wall Street just had a day for the history books. The market exploded Wednesday afternoon with Donald Trump's announcement of the 90-day pause on some of his aggressive tariffs, sending investors into a buying frenzy. The S&P 500 soared 9.5%, its third biggest single-day gain since World War II. The Dow jumped nearly 3,000 points, while the Nasdaq surged over 12%, marking its second-best day ever. A record-breaking 30 billion shares traded, the busiest day in Wall Street history amid a volatile trading session that saw the major averages soar to multi-year records, according to Nasdaq and FactSet data that go back 18 years. Tech led the charge. Tesla rocketed up 22%, Apple jumped 15%, and Nvidia soared 19%. But with China still targeted and EU tariffs looming, this might be more of a relief rally than a long-term fix. With global trade chaos looming large, India's central bank has turned its gaze firmly inward, towards growth. As America's tariff tirade rattles world markets, the Reserve Bank of India on Wednesday cut the repo rate by 25 basis points to 6%, marking its second straight cut this year. But here's the real shift. RBI moved its stance from neutral to accommodative, signaling it's ready to do more if growth falters further. RBI Governor Sanjay Malhotra didn't mince words. Uncertainty is rising. And while India's domestic-driven economy offers some insulation, we are still exposed through trade, currency, and capital flows. The central bank now expects India's growth to slow to 6.5% in FY26, down from 6.7%. This comes on the very day America's new 125% reciprocal tariffs kicked in, threatening to freeze global shipments and spark a deeper slowdown. While inflation is cooling, last clocked under RBI's 4% target, the bigger worry is global volatility. Oil prices have eased to $60 a barrel, and farm output looks stable. But currency battles may be brewing. The weakening Chinese yuan, if manipulated further, could hurt India's export edge. With the rupee under pressure, RBI's managed float strategy might face its toughest test yet. India may have avoided the tariff axe for now, but in this stormy global sea, the RBI steering wheel just got a lot harder to hold. In a bold move that's turning heads on Dalal Street and Wall Street alike, BlackRock, the world's largest asset manager, has made its first ever investment in an Adani Group entity, snapping up nearly one-third of a $1 billion bond issuance by Renew Exim, a promoter firm of the Adani Group. The money, largely aimed at acquiring a controlling stake in ITD cementation, with the rest earmarked for Adani's ambitious 5 trillion rupee capex plan over the next 5 years, spanning green energy, infrastructure, ports, airports, and more. Despite ongoing bribery litigation in the US involving Adani promoters, BlackRock's move is being viewed as a vote of confidence. Global investors clearly aren't too rattled by the DOJ case, said one insider. The bond tenure is over 3 years, offering medium-term returns at interest rates reportedly between 7 to 9%, a premium prompted by recent risk concerns. On Wednesday, Adani concluded its open offer for ITD cementation, acquiring nearly 21% from public shareholders. Once fully closed, Renew Exim will control over 67% of the company. Meanwhile, Adani Green Energy also refinanced $1 billion of debt, its first big fundraising since the legal trouble began. The message here? The Adani Group is not just surviving. It's expanding, and some of the world's biggest money managers are buying in. JSW Energy just plugged into one of its biggest clean energy deals yet, and it's making waves. Its subsidiary, JSW Neo Energy, has acquired O2 Power for a whopping 12,468 crore rupees, marking JSW's largest ever acquisition in the renewable space. O2 Power, a platform built by global giants EQT, 51%, and Temasek, 49%, boasts a total capacity of 4.7 gigawatts, including projects in the pipeline. With this move, both EQT and Temasek have fully exited the venture, which they launched back in 2020 with ex-Renew Power execs Parag Sharma, Piyush Mohit, and Rakesh Garg at the helm. So, what's JSW getting? A solid 1,343 megawatt of operational assets and a total installed capacity of 12.2 gigawatts, over half of which is now green energy. We're significantly ahead of our 2030 renewable energy target, said Sharat Mahendra, CEO of JSW Energy, calling the deal a win on both value and strategic fit. The O2 portfolio includes high credit PPAs covering 3,722 megawatts, with nearly 1 gigawatt more in the pipeline awaiting agreements. JSW's clean energy engine is clearly firing on all cylinders, and this deal just gave it a major boost. That's all for today. Thank you for joining in. We're eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a tremendous Thursday.